Hey guys, Deathletter Magic here, and remember the dozen or 30 or 50 or 1,000 times that I said in the last couple months, just wait for specifically the Q3 financial report from Hasbro, because it is going to be devastating. It is going to be when the people who pay no attention and for some reason think it's a good idea to keep putting money into Hasbro stocks finally wake up and get a clue, and they did. Their stock is currently at like $60 some. It's down like 30% on the year. That is billions in losses. And some numbers I saw floating around that I haven't quite vetted yet are that about 3/4 of Hasbro's money come from Wizards of the Coast right now. They got a bunch of debt and acquisitions that they're doing nothing with. They're making no money, and the people there are incapable of doing their jobs. So let's just jump into this as part of their official report that they put out. And once again, as I always say on this channel, this is an opinion piece. This is not any kind of financial or investment advice at all. I am not an accountant. I'm just giving my take on this. So, 1.68 billion down 15% and whatever down 12% absent FX. Don't know what that means, don't care what that means. That's just for the quarter. They did that in 3 months. Oh, Peppa Pig and Monopoly Man and person from a plane where they don't have the technology to do that. Heck, neither do we on Earth. They look awfully excited about those numbers, and they shouldn't be. So operating profit, I mean, still 194 million, so they're still profitable. And then as adjusted, well, they made a magical adjustment and it's 270.5 million. Let me just tell you what that adjustment is, okay? I gotta be real careful what I say. I don't want to accuse them of anything, but the as adjusted figures are non-GAAP financial measures. What does non-GAAP mean? I'll just read you the definition and let you make the conclusion. Non-GAAP earnings are measures that are not prepared using GAAP, which is generally accepted accounting principles, and are not required for external reporting or other public disclosures. And Hasbro is publicly traded, obviously. So if they follow the law and count the numbers the way they are legally required to, you get the first number. And if they do it their way, which they don't have to disclose most of, then we get the higher number. Wow. Alrighty then. So net earnings, who cares? Earnings per share, I don't know how that's not a negative number. You know what, there's nothing else valuable on this. Let's just go to year to date. Here we go. 2022, net revenue is 4.18 billion, which sounds great until you realize it's down 5% or 3%, whatever probably other made up number they have there. Operating profit, $500 million. And you know what? All those other numbers look great until you like look at them year to year or with any kind of metric. I guess standalone, this is supposed to impress someone. Oh, I gotta throw this in. So this is like the whole, hey, here's what we did, announcements and highlights, woo! They put Magic 30 on there? That was a highlight? That was literally the biggest lowlight in the last 30 years. And it hasn't even happened yet. And also it hasn't even been 30 years. Owned out Woman King, I didn't know they had anything to do with that, but I'm not surprised in any way. That absolute historical fiction trash piece that like tries to cover up that what slavery really was, and they just take a real story that happened and completely and utterly misrepresent it as the opposite. Everyone on every side of things are trashing this garbage pile of a movie, and they put 95% fresh and 99% audience score on Rotten Tomato. Rotten, that's not how you spell rotten, by the way, in English. If there's a typo in a multi-billion-dollar company's financial statements, I am selling the stocks, period, the end, that is it. If they can't even spell the word rotten correctly or proofread this crap, what the hell do you think their accounting department looks like? But we as Magic fans already know that they cannot spell anything on the cards correctly either lately. So they can't translate stuff to other languages correctly because they don't want to, shell out more than, what, a couple grand to do that? PulseCon was not a complete disaster. I've seen worse, but it wasn't great. Everything on here is awful. For Power Rangers, that multi-billion-dollar acquisition, or 1.9, 1.8, I don't remember what they paid for this stuff. G.I. Joe, they bought that too. They spent too much on a bunch of stuff, and they're doing nothing with it except, oh wait, Power Rangers female-oriented because that was, that's who watched that show, and kids who are 40. And selfie series, wow, welcome to 2004. Get out your smartphone and take a selfie. I wonder how that made the highlight list. I don't even need to look up the numbers. It probably wasn't good. But let's look at the third quarter net revenue and operating profit performance. And I bet you wouldn't be that excited about that sentence otherwise, but look at this graph. Oh, they finally say what FX is, foreign exchange. That actually vaguely makes sense. Well, it just comes down to stop printing trillions of dollars, Biden. Thanks for inflation, Biden. 100% his fault. Oh, pardon me. No, we actually don't know who's running our country, but it's not him. So that's frightening. Can't wait for the next 2 elections. But yeah, at this point, or I don't know if this is year to date or just Q3, But net revenues in 2021 are in green on the left there, and in 2022, there they are, 15% down. And Wizards of the Coast, the digital gaming segment, that combined, 16% down. The consumer product segment is down 10%, which, yeah, that kind of makes sense. That's kind of across the board at most companies. Not all companies, but some companies. And then the entertainment segment is down 35%, which tends to happen when everything you make sucks and is just woke trash. And then if I recall, they, a couple years ago, bought up a production company for like movies and stuff and did absolutely dead-ass nothing with it. Yeah, that'll start affecting you. So the operating profit is down 47%. Oh, but guys, don't worry. The margin is only down 5% absolute. Relative, what even is that? A lot. 50%? It's a lot. Look at that operating profit drop. Oh my gosh. Let's look at the different segments here. They got the numbers for us. Franchise brands, which is, they lease out their IPs, basically. It's 1% down in the year, and then quarter to quarter, it's down 12%. I don't think quarter to quarter is a very good way to measure it, because year to date at this point, yeah. So negative 1%, whatever. That's not that bad. I mean, if you look at everything else, partner brands plus 1%, that kind of offsets it almost, although it's a different amount of money. And then Hasbro Gaming. Yeah, that's mostly Wizards of the Coast. That's mostly Arena. That's we know what that is. 15% down, almost the biggest hit after their disastrous TV, film, and entertainment just tanking. I don't even get how that dollar amount is that much lower than franchise brands. I really don't. But franchising is like zero effort, just here, take this and hand us a check stuff. There's almost no risk. So if even that's down 1%, come on. Emerging brands, negative 2%, negative 8% on the quarter. Or the quarter 3 comparison. So, everything new they tried completely sucked, like probably Power Ranger selfie crap oriented to females. And then, of course, TV, film, and entertainment, 32% down quarter to quarter, comparing the two quarter 3s, and then 19% down year to date overall. Absolutely horrible. So overall, they're down 5%, which doesn't look that bad, but that's just because of franchise brands. So companies other than them handing them money is the thing kind of propping them up, and even that shrunk a little bit. All their film and entertainment crap is dying, and all their gaming stuff is dying, and Magic is dying. So there's one more thing I want to look at, and you knew this was coming. Just specifically the Wizards of the Coast and digital gaming segment. And this is where they're making what I consider to be very misleading statements. Where on here does it say a drop in active users? Where is that? Because that's the real reason. We all know this. And they've been trying to cover it up for at least a year and a half. Like actively threatening and coercing people, allegedly, to remove statistics on this stuff. So that nobody knows how unbelievably horrible the active user count on Arena is. Yeah, they would never release this. This isn't like an audit. This isn't, it's publicly traded, but they don't, I think, have to say that. I don't know. Maybe they do. But it's certainly not on this sheet. So, all right, here we go. Quarter 3, 2022. Net revenues, $360 million to $304. There you go. 16% gone. Operating profit, 36% down. How the hell did their expenses get that high? They ain't putting the money into MTGO. That is an actual fact. And they aren't putting the money into Arena, clearly. So let's head to the balance sheet, because it's really hard to hide stuff on there. It's actually almost impossible. It's actually somewhat illegal to hide things on there. Inventory. $300 million increase in inventory. $1/3 billion in inventory just sitting there that they haven't sold. Excuse me, what? You want to know why the stock dropped when you look at those overall numbers and you're like, oh, well, overall it's like 2% down and it was a rough quarter because they didn't release stuff and they bought some games. What, if anything, it's up. Except for the inventory that they're sitting on. You don't sit on an additional $300 million, what was it, like 40% in additional inventory year to year, and not have a problem. You can't sell your products. That's your problem. Oh, let's not skip the first line. Cash and cash equivalents, so in other words, liquid assets, that you can spend it very easily. It went from $1.1 billion down to $500 million. They have burned almost all of their cash, and they have inventory sitting there. Those are the only two numbers you need to see right there. You can make everything but those numbers look good for a quarter or two, okay? But those two right there, any investor saw that and hit the sell button, okay? That is why their stock is down today. How did property, plant, and equipment net go down when property values went up? What the hell happened to your equipment? Goodwill, that's like customer goodwill, is an intangible pile of crap that people use to manipulate their statements. That's entirely my opinion, once again, just like the rest of this video, but that's generally accepted to be what it is. It's the value of, oh, people trust our brand's value and goodwill and our, you know. You can't sell it has no value. It's absolute BS that that's allowed on these balance sheets. And then, by the way, it went up. Hasbro and WOTC's goodwill went up. No, it did not. And then we've got other intangible assets, which even though they're intangible, which means they're not real, it's not quite, that's an oversimplification, but even their pretend assets went down by about 100 mil. Looks like, was that 130 million? Ouch. Let's not forget short-term borrowing, which went from basically nothing. That had to have been like a vehicle loan or something. I mean, that's 0.9 million is $900,000. You can buy like one box truck. Anyway, that went up to $122 million. If a publicly traded company is getting like private equity borrowing or borrowing from like, well, banks, that is the reddest red flag that you can be waving in front of the investors' faces right there. And if you're like, oh, but accounts payable went down, so they paid less vendors, less things during inflation. Wow, that's impressive. No. That tends to happen when you're sitting on an extra $300 million worth of inventory and you stop buying more. You stop telling the people who are producing it to print it and then invoice me later. That's an accounts payable liability generally. Now, the long-term debt did go down, but we know what those acquisitions were for 3.7 and 3.9 billion, and they ain't doing crap with them. Not enough. They did more than they did in past years, but it's not enough. Everything they touch in entertainment is woke trash, and it is burning their company to the ground, and the shareholders are done with it. So there's some more granular stuff above like page 28 if you want to go look at it. It's certainly interesting, but I think I've given you enough of a snapshot of like the most important parts of these. But the cash flow chart is interesting too, because that's like in and out, not just, oh, look at this net number. Oh, look at this gross number. Woo. Where did it go and why did it go there? If you break down that, oh, it's bad. It's very, very, very bad. Like, I'll just tell you, repayments of long-term debt, 2021, $1 billion. 2022, $182 million. It's more than 5 times lower. Repayment of long-term debt. So the long-term debt did go down, but not because they paid it this year, they didn't have the money. So that missing liquid cash assets didn't even go to that. Now, there are reasons to not have liquid cash on hand. That is the thing. But, you know, like I said, there's more to this, and I'm not a financial advisor, and I only vaguely understand some of this stuff. But, man, is this bad for them. So they go on to say, as an explanation, because you always got to give an explanation. You can't just leave them hanging like, whoa, hope we do better, whatever, bye, give us money. Magic the Gathering is down in the quarter due to the timing of releases. And Dungeons & Dragons is up in the quarter. When did they acquire that other D&D company? Because it's an upfront cost, and you haven't been, like, you haven't paid off the cost of that yet. There's no way. Maybe that didn't even happen yet, which means quarter 4 is going to be an actual catastrophe. Just from a numbers and graphs standpoint. But investors do like acquisitions, so like, okay, there we go. But tabletop revenue is down 90% due to timing of releases. What the hell does that mean? Does that mean last year you did 5 and this year you went back to the normal baseline number of 4 standard sets? Is that what it is? Or you just generally released less crap in the third quarter than you did last year? Or the quarter before? Because that probably is true. But you can't just say, oh, it's a timing thing. No, nobody bought your products and you made less of them. It's really that simple. Guys, it's all just timing. These aren't real numbers. Well, until you look at year to date or year over year or any other metric at all. But digital and licensed games, guys, are down 37 freaking %. I can't imagine what that loss was after that MMO crashed and burned. Difficult comparison, though, against premium game Dark Alliance, which is awful, and Magic the Gathering Arena mobile launches. Oh, guys, it's a difficult comparison. Yeah, one flopped and one succeeded and then flopped. Because standard is unplayable and you refuse to do anything about it. Ban some cards. You've now lost like $1 billion in losses, give or take, between this, the operating losses, the profit margin losses, and the stock losses. Might even be closer to $2 billion, but you can't blame it all on just the fact that they won't fix standard, but if standard was healthy, they wouldn't have to print so many secret layers. They wouldn't have to do $1,000 sets. They wouldn't have to keep pissing people off and looking for money. The money in the active players would already be there. If there is nothing for new people to join the game with because standard is too overpowered, convoluted, and complicated and confusing and aggravating, then there is nothing. There is nothing. There is nothing that you sell because you don't sell casual kitchen table bulk boxes and, random stuff bought on eBay, okay? If somebody picks up the game and does that, you make $0.00. For the products that you actually sell, Modern is not very approachable, Commander is very not approachable to new people, and now Standard is, I would be embarrassed to show somebody Magic the Gathering and teach them Standard, or bring them to F&M and try and get them to understand what the hell is going on there. So yeah, I mean, they've lost basically about $1 billion by not banning, multiple cards more often. They need to ban about 3 to 4 to 5 cards per quarter and then rotate twice a year, or they needed to do a giant ban sweep along with the last rotation. So they missed that bus. That's already left the station. Next year, I guess? They're not going to take drastic action. These people are too cowardly and too stupid. And we're like, what? How many months out from rotation are we? I don't even know, and I don't even care. Well, when Hasbro calls them and says, hey, what's going on? They need to say, you assholes are what's going on, and then hang up the call and proceed to run the game correctly. I'm not convinced that any of the staff remaining has the ability to do that. They've lost talented people. They've underpaid contractors, pissed them off, and made them leave. There's no just simple, oh, we're just going to turn this around. Okay, let us, take the reins. We'll do it. Wizards taking the reins, that's insane. We need people who know what they're doing and not stupid suits. We need people who know card games. I don't think Hasbro understands that because they're a bunch of stupid Wall Street suits. They don't even know how to run their own company. So just saying, print more, make it more powerful so people have to buy it. What do you mean you hit the wall on power creep? What do you mean you pissed off everybody and they left? What do you mean wallet fatigue? What does that mean? They deserve this and more. They really do. I can't wait to see who buys Wizards of the Coast in the Hasbro bankruptcy. So then there's the year-to-date 2022. Instead of just looking at a snapshot of one quarter, because they did say, yeah, it's the timing of releases. Yeah, if in a roundabout way, okay, it's not quite apples to apples, but here we go. 1 billion down to 986, so it's down 2%, operating profit negative 6%. There you go. Costs went up a little, which is weird because another graph I don't think I showed says that costs of producing physical products and all products actually went down. And they spent less on marketing. But let's read the ridiculous excuses and then I'm done with this video. I mean, I told you what's going to happen. I told you what's happening now. If you haven't sold your Magic collection that you don't care about, keep whatever you want. Keep whatever decks and singles you want. Keep whatever binders you want, okay? But if you care about the value of your singles, sell them. I have been saying that for quite some time now. And at this point, it's almost too late. You should have done it right before inflation really got nuts, because that's when people are buying that kind of stuff up. Anyway, they say revenue's flat, absent, okay, who cares? Foreign exchange, who cares? Magic the Gathering, flat, up 2%, absent FX. That cannot possibly be true. How did you lose money then? What lost money if it wasn't them? D&D down, led by Dark Alliance comp. I guess, did they misspell flop? And tabletop revenue up 5%. Well, then, if it's flat, down because of Dark Alliance and then up, why the hell did you lose 2%? And why does this quarter look so bad? Anyway, digital and licensed games down 25%. There you go. There you go. How the hell? Oh, you know what? I figured it out. Magic the Gathering, they consider that paper. That's why it says flat, up 2%, foreign exchange, whatever. Digital and licensed games. So it says difficult comparing Arena and Dark Alliance, but thanks for letting us know that Arena is included in that and that you don't consider Arena to be part of Magic the Gathering. Which, that's interesting. Remember that one year where on their financial reports they combined tabletop with board games because Magic was doing so crap that they threw in Monopoly? And then in my opinion they tried to pass it off as apples to apples, and it was the most ridiculous thing. Half the stuff they're putting under for numbers have to be illegal. They just have to be. I don't know. I don't know. Just my opinion, once again. So, yeah, there's really no excuse for this other than Arena's dying. And the paper products, that ain't standard. Without standard, you don't have a game and you don't have customers. Every person who leaves, there's nobody to replace them with. You pushed too hard and you have pushed the customers out the window. Well, actually, no, the customers are pushed out the door. Okay, they went over to the next store over to play Warhammer or something. Or Legacy's Allure, which just shipped now, and some people are getting them in their hands. Woo! Full disclosure, former channel sponsor. You can play for free on Tabletop Simulator. Just throwing that out there. He's not paying me to say that. Just thought I'd let you know. But you know who they pushed out the window? The 5th floor window is the stores. By competing directly with them on Amazon so that their numbers don't look so crap for a couple years, they've now put enough of them out of business, plus then the poor timing of COVID. Not that there ever was a good time for COVID, but it was right after they started selling on Amazon. So many stores closed, and the ones that are still open stopped carrying their products. It's that simple. So a lot of quote-unquote stores are just BS, 500 square foot fronts that probably are technically a Magic store, that sell 99% of their stuff online. I think that's still a thing. I mean, they got rid of ACD, which was enabling that. I think they got rid of Diamond Comics as a distributor, and they were the only other one enabling that. But if you've got a play area that's vaguely certified, you can order whatever the hell you want, basically. Some stuff is allocation, but at this point, if they're like, no, you can't order more than that, they're like, we have stuff we can't get rid of, just take it. In fact, we'll give you a discount. Oh, you're running a little 1,000 square foot storefront with a 6-chair gaming area and you're technically in the WPN program? Okay. You can order 6 pallets of this new set to just flip online for a 1% margin. And even then, there have been so many flops. God, it makes my store look good. And they were just, I mean, you could make money on like Origins, you could make money on stuff, you could make money on BFZ, and that was just about the end of it except for Master sets. I don't think I made a profit on anything after BFC and OGW. It depends how you look at it. I might have scraped by eventually after like 3 years holding some uncommons and tokens and selling them ones that shot up for $2 on a buy list or something. I got a couple grand off it. That might have evened it up, but we're looking at like I'd order $5 grand worth of stuff and lose 500 on it. And what I was holding at the time was not worth an additional 500. And that was standard set after standard set. So they've done that to drive away the stores. They've actively competed with them. They've angered them. They've ripped them off. They've promised them product and then not sent it. They've shorted stuff. They've had asynchronous releases between countries. You name it. I could go on and on and on to what they've done to stores. So actual real you can play Magic Hair stores, which are the staple of, having a place to play. Because if you don't have a place to play and it's not structured, you're either on Arena, which I think we've proven you're not on Arena. Nobody is still on Arena, according to their own numbers stated right here. And my third-party numbers for the last couple of years. And their new format, Alchemy, was a complete and utter failure. Nobody touched it. It was supposed to be a big money maker because they made it greedy as hell. And then people were like, hey, you do realize I don't have to play this, right? And they're still trying to shove it down our throats, make every single tournament and side little thing Alchemy. And they made some of the drafts Alchemy. Now they've just resorted to something I'm going to cover in another video. You will not believe, if you haven't launched, what Arena did. That was almost a sentence. You will not believe, if you haven't launched Arena lately, what they did in one of the later updates, the event that they launched. It is very old school Arena beta. Very us versus them against Hasbro. Or, well, against WOTC, actually. But yeah, everything's falling flat there. So without Arena to play standard, and without stores to play standard for F&M, why would anyone play or buy standard? It's that simple. So now they're trying to sell power creep cards to Commander. And if you're the power creep guy who shows up to your Commander night where it's self-policed and it's about fun, your stupid ass is about to have nobody to play against as well. So all their customers have no place to play. They're alienated. They're pissed off. They're wallet fatigued and the economy's doing terrible. People are just moving on. They're moving on from Magic. It's that simple. Hasbro is going to get absolutely destroyed at the end of the year when they see the Black Friday and Christmas numbers because they are going to be an actual train wreck. It's not even going to be graphs. It's just going to be a picture of FEMA showing up because it'll be that big of a national disaster. In fact, somebody at Hasbro, okay, if you want to really be savage, I mean, maybe the same person who snuck a couple typos into it. Just kidding, that was on accident. I'm getting the impression a lot of their employees are actually functionally illiterate, so they put them in charge of writing things that are public-facing to billionaire hedge fund managers. Oops. But hey, whoever's assembling these, maybe make one of the graphs into little stacked up FEMA tents. I think that'd be pretty savage, something to do on your way out when you quit. I'm joking, don't actually do that, I'm not encouraging that. So just to wrap up, Hasbro's stock at the peak this year was about $104, and it's currently sitting at $65.76, down 29.51% in the last 365 days. And if you're into that kind of thing, keep your eye on it in the next 2 weeks, because while CNBC is covering this, and their article came out 8 hours ago, Market Watch covered it 4 hours ago, even tomorrow morning, their stock, if it's above $50, I'll actually be a little bit surprised. Somehow it's up 1% in after hours trading. Explain that to me, but I guess people are buying the dip with some kind of algorithm without actually checking the news, which, yes, investment people are that stupid. Even the best of the best hedge fund managers, the overwhelming majority of them and all these clever investment and individuals and all this stuff, they almost never outperform index funds. So if you just bought general markets that represent the whole economy, they are doing worse than that. These professionals that make huge bonuses and all that to sit there and lose money, basically. Not lose it, but not make money at the same rate that they would if they knew what they were doing or were more cautious or, paid attention to the markets or did actual work. They all think they're smarter than the market and make better moves, but mathematically, that is impossible. That's not how stocks work. So I hope Hasbro crashes and burns. Let me know your thoughts on any of this, and I will respond to this absolute non-traversy with that dumbass Pokemon guy tomorrow. If I can even motivate myself enough to give a shit. But he did say, completely incorrect things about me, so, and he did violate YouTube's terms of service, too. That's painting a pretty big bullseye in your head, don't you think? Well, he's about to learn who he's messing with very shortly, so watch for that one. Subscribe if you don't want to miss it, and I'll see you guys next time.